SoFi's earnings report is fast approaching. It's actually before the market opens on Tuesday. Yes, same day as PayPal. But rest assured, we're going to cover both of those companies on the channel. Now, just like last quarter, this is a prediction video. I'll basically mention a couple of segments of the business. What do I expect from SoFi? And then during the earnings report review, we will compare my predictions to the actual numbers. Last quarter, I was wrong, but I was wrong because I was too conservative. Now, for SoFi as a whole, as I said, probably a bad stock, still a good company. Because if we actually look at its past performances when it comes to revenue guidance and EPS, and then if it's a beat or a miss, it has been beating the estimates for quite a while now. And it's not just that, they've also raised guidance quite a few times. But that clearly didn't change the market's mind. Year to date, stock is still down 25.5%, has a market cap of $7.8 billion, pretty high short interest as well. So, by the way, if it does report something extremely positive, raises guidance, then maybe we might see a small squeeze. Could happen, but I wouldn't gamble on it to happen next week. Anyways, before jumping into all of that, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And so let's start with the members for last quarter. They added 622,000 members, growing 44% year over year. Now, they did also say that they expect to add at least 2.3 million new members in 2024, which represents 30% growth. Now, 2.3 million members means 575,000 members a quarter. So in Q1, they're already well ahead of that. Of course, might be that not each and every quarter they're going to add over 600,000 members. As for Galileo accounts, well, it has been going up, but first we did have some slowing down, but in Q1 we had a little reacceleration, 20% year over year growth, but that's also because Q1 of 2023 was quite weak. Q2 started already to become a little bit better, but especially Q3 and Q4, those are going to be quarters where, well, the comparison is going to be a bit trickier, let's say, but if they can continue to grow at around 18% or so year over year, I think we'll all be quite happy. As for quarterly adjusted net revenue, last quarter was a bit down quarter over quarter. Q4 was pretty strong, but in this quarter we increased revenue by 26% year over year to reach $581 million. Quarterly adjusted EBITDA came in at $144 million with a 25% margin. I do want to mention a couple of extra things here. So like I said, sales and marketing last quarter, $167.3 million. I would expect it to be maybe a bit of the same for this quarter. Net interest income was $402.7 million, up from just $236 million same quarter last year. Don't forget net interest income, as we are still in high interest rates environment. And as they add more members, as more deposits flow into the business, do expect them to make the most of the current state of this macroeconomic environment. I would also point out, and this is with regards to the technology platform, so total net revenue for the technology platform was down quarter over quarter, but the contribution profit was basically flat to up a little bit. I expect total net revenue for the technology platform to be up quarter over quarter, and so contribution profit should be up as well. Keep an eye on those numbers. Let's go back to a couple of things that were mentioned in the previous earnings calls / conferences with analysts. We talked about the tech platform mid-20s% CAGR and then lending in mid-teens CAGR. On the profitability front, bridging down to GAAP EPS, we expect to generate 30% EBITDA margins by 2026 and 20% GAAP net income margin by 2026. And SBCs is expected to be high single digits as a percentage of revenue. So we put all of those CAGRs and the profitability targets into place, and that gets you to your 55 to 80 cents of GAAP EPS that they're really confident about. Still a long way to go, but if this target remains the same, I think that's pretty bullish for SoFi. Now, last quarter, don't forget, net income included the benefit of $59 million net gain associated with the exchange of a portion of their 2026 convertible notes at a discount for equity during the quarter. So they reported GAAP diluted earnings per share of just 2 cents, which was not impacted by the gain from the convertible note exchange. And so guidance for Q2, they expect adjusted net revenue to grow approximately 15% at the midpoint, adjusted EBITDA to come between $115 and $125 million with an adjusted EBITDA margin between 21 and 22%, and GAAP net income of just $5 to $10 million. As for the full year guidance, still about the same, financial services net revenue growth of more than 75% versus 2023 levels, tech platform net revenue growth of 20% versus 2023 levels, lending adjusted net revenue at 92 to 95% of 2023 levels, so a bit below. GAAP net income of $165 to $175 million, and that includes that $59 million gain that we just talked about. Adjusted EBITDA closer to $600 million, GAAP diluted earnings per share between 8 to 9 cents, and $800 to $1 billion of tangible book value growth. The last one here, total capital ratio over 16% at year end. And this guidance assumes expenses under the EBITDA line to remain flat when compared to 2023, a 50-50 revenue split between lending and the combined tech platform and financial services segment, as well as adjusted EBITDA margin of 25% for the full year 2024. And so, if we look at the analyst estimates, this is from Koifin, the analyst estimates as of Friday, July 26th. Koifin, link down below for 20% off. So, for fiscal year 2024, they expect EPS of 7 cents and sales growth of around 16.4%. In fiscal year 2025, they expect sales to grow just 16.2%, but EPS to grow 193.2% to 21 cents. In fiscal year 2026, they expect a reacceleration in sales growth closer to 19.6% and EPS to continue to grow 98.4% year over year. So again, bottom line here growing quite fast. And remember, for 2026, they SoFi expect 55 to 80 cents GAAP EPS. So to me, it's pretty simple. As long as the long-term goal, that 2026 goal and beyond as well, does not change, or at least does not get reduced, I see no reason why I should be turning bearish or less bullish on SoFi. There might still be some quarters here and there where we see a little bit of weakness or not the expected growth as we would have thought. But overall, if that long-term target does not change, why should I change my mind? Plus, I'm pretty sure that we're going to get rate cuts this year. I mean, inflation numbers are coming in favor of more rate cuts, yet interest rates are still extremely high. So yeah, remains to be seen, but right now they are benefiting a little bit from the high interest rates environment. They will benefit from the rate cuts as well. It's a win-win. Yes, lending segment is getting hit, but the lending segment has become smaller and smaller as SoFi has grown in the last couple of years. And so, my predictions. I expect Q2 new members to be at 620,000 with a CAC of $265, so about the same. Galileo Q2 revenues above $100 million. Q2 net revenue of $585 million, again above their own guidance, because I do think that they usually beat their guidance, so it should be about the same. Adjusted EBITDA of $140 million and deposits of over $3 billion. Now, EPS estimates, I do think it's going to come quite close, 1 cent or break even, which is also what the analysts are expecting. And so lastly here, looking at the graph, we have been in those between areas here for quite a while now. I mean, over a year, we've been trading between 10 and $6.30 or so. Previously, we also had that big period where we were trading between $8 and $4.50, and then we've got that huge bump. Can it happen again today? Remains to be seen. Of course, the stock will do what the stock will do. As long as the business continues to perform very well, I think we are good for the future. Right now, we're sitting just over the 200-day moving average. The 50-day one sits at $6.98. The 20-day one at $7.05 with RSI neutral. This is, by the way, on the weekly. Like I said, Tuesday morning, SoFi will report their quarterly figures. So that's about it for this video. Hopefully this is a good review, little recap of what has happened, the expectations, my predictions, and of course, I see you all on Tuesday. Well, maybe I'll see you in another video on Saturday and on Sunday and on Monday. You have to be subscribed for that. So hit that subscribe button, like, notification bell on, do all of that. And I'll see you all in the next one. Bye-bye.